to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the frivolity, the insanity, what the hell is this crazy ass market up and down like you know what? Interesting to see our S&P 500 breadth, broader market. What we sort of this is on our 30-day trial. We leave it open for the students and stuff to get a good feel for how the broader market breadth works. Anyway, you can see. Did issue a buy signal there the other day on the stock market. And I've even been talking to you guys recently about how I was kind of feeling like this thing needed to look like some sort of W. And we had that bounce there at the beginning of October. Then we rolled over. And really quite interesting, that whole eclipse window, right? Because we went into our first eclipse here. Market went into sort of the pooper. Then we came out and had our other eclipse and FOMC meetings, which were basically non-events. And here we go, back into rally mode. Also, too, kind of talking to this tone, and this is incredibly useful information. I illustrated this now about 2 or 3 times. So we should be able to actually put together a nice little sort of tutorial on this. But whenever you see the country funds specifically, and this is sort of like the whole world equity markets, of course, having a hard time getting my mouse to move down. There we are. They both went into heavily oversold there. And that was on the 31st of October. And sure enough, rally, pitcher's name Sally. Interesting message we're getting out of crypto now, all you crazy crypto fans. So I would, this is definitely the kind of environment, for heaven's sakes, don't chase. Don't chase. When I do the full sort of Bitcoin review on Sunday's Broiler Chicken Show, we do the daily, I think like the weekly, daily, and 4-hour sort of summary tweets and stuff. We can go into greater detail about what I'm seeing out of the corn right now. For the purposes of this conversation, and I have to try and get a little bit more structured about this. So we will talk about Bitcoin in a bit, but I kind of think that the corn's in a channel right now. And I haven't really seen a break of the channel yet. But having said that, just be forewarned. This image right here should be a very, very cautionary image to all of you. And of course, the people that subscribe to the pro package, the crypto actual algorithms are trying to speak to us right now. After the fact, maybe a week or 2 down the road, we can take a look at what the signal produced. But real time, if you want to see those real-time signals, we highly encourage you to consider subscribing to our service. We put a lot of hard work, time, and effort into building this, and and I actually am quite pleased. I consistently see people say, I've been trading with the breadth now for, in fact, one gentleman said, been trading with the breadth now for a better part of a year, and I'm immensely pleased at the usability of this tool. So that's totally awesome. And you can always come on our website, therationalinvestor.com. We have a little sort of summary pitch. I don't know whether I have, this could use a bit of work. In fact, actually, this probably should be the image right up top. But a nice little pitch about the breadth and the indicators and what the public's think. But also remember, too, our pro package actually has tons and tons of value-added services, including we actually have a full screener system that you should be able to build all the screeners that you have ever liked or used. We just have to get on top of those tutorials, just so you guys can actually see how incredibly powerful this engine is that we've built. But anyway, point of the matter here is, consider joining for those advanced features. Back to the market. Broader market, as we sort of said there a moment ago, we got buy signals on the broader stock market. Buy when it snows, sell when it goes. I think it actually officially snowed on Halloween. So I was posting pictures of pumpkins buried in snow. So you all know what you're supposed to do if you invest in risk assets. You know what time of year it is, which is kind of an interesting comment with regard to crypto. I love the idea of investing in crypto, and in fact, our team, the team here, we are sort of a triumvirate. Julian Seward and I. I've got the little old lady portfolio going. Seward, we've got him. He's like the crypto expert out of the team, if there ever was one. And of course, CTO. He's built this whole website and engine and everything. He's got a portfolio of assets that he's managing in crypto. So by all means, I wanna buy crypto. I've been barking at you guys. Have you got your skirt together and all that kind of fun talk. The only issue is I don't like chasing. Don't chase, don't chase, don't chase. Right. So anyway, whether it be the stock market, whether it be things like crypto, I really like the idea of accumulating here. And then, of course, in the coming spring, summer, probably around my birthday, everybody, if you don't know when my birthday is, you better make note of it because literally the market almost always pivots on my birthday. So, it is the time of year for snow to be falling. So get ready, people. Daily routine, trying to be the demonstrator of best practices. Always think it's a good idea to, put yourself on a regular routine, especially if you're a trader. Fancy yourself a futures trader, Forex, whatever you want to call it. Actually, big shout out, big congratulations to our the mayor of Corby. Actually, look at that. Elan just gave you another shout out. The mayor of Corby, Raf, just passed all of his prop firm tests. I'm not quite sure what firm he's working with, but super excited to hear that he's kicking butt. In fact, actually, the level 3ers right now, the recording that we're doing is actually when Raf was my TA back in like 2018, 2019. So that's kind of fun. But anyway, demonstrator best practices. Always good idea. Check in how you're doing, mentally, how you're doing things with diet and exercise, how you're doing with things like sleep, and of course, how your computers are doing. So you can see I was feeling pretty positive this morning, checking in on the news. First thing out of the gate, I get up very early in the morning. I kind of see what's the tone. Japan actually finished up nicely on the day. I noticed my Toyota Motor Company is just going crazy. Ugh, drive you nuts. Woulda, coulda, shoulda. Can't believe I missed that. I'm gonna remember that trade for the rest of my life. Like I literally missed my fill by like 50 cents or something. Anyway, it's booming higher, so Japan's feeling pretty good. We had today's actually a pretty important day in that we had non-farm payrolls. Somebody yesterday mentioned that they didn't like fundamentals and fuck fundamentals. Like now, we're supposed to be a rational analyst. So we want to ideally trade when the fundamentals and the technicals correspond. I do see a lot of sentiment analysis people are using, and you might even argue TRI's breadth indicator is to a certain degree a sentiment indicator, which is all about sort of quantitative analysis. So interestingly enough, some fundamentals, the government issued reports, yeah, maybe we take them with a grain of salt. And they always say, be careful trading with non-farm payrolls data and stuff like that. It's so political, highly subject to revisions, and it's manipulated as all hell. But what's really interesting about this report is quite often you actually get the market is pushed violently in one direction into the report. Then the report comes out, and it's almost like the actual number is not even really that relevant. Usually, technically, because the market is so driven in one direction, buy the rumor, sell the news, sell the rumor, buy the news, whatever the case may be. that the market often reverses right off of that release. I don't know whether we got really usable information here. The sort of sentiment that I'm getting out of the jobs reports lately, we had this sort of the same kind of reading out of the JOLTS report. I think the market state right now, and if you want to write something down, something like learning that you can maybe take away from this. Great example today. What's good for Main Street isn't usually good for Wall Street, and quite the opposite. What's bad for Main Street is usually actually good for Wall Street. So I would interpret this report, and we also had the JOLTS report earlier, as Joe Sixpack's not going to be feeling too good. He's probably, the jobs and the sort of, hey, we'll pay you any kind of salary you want. You want benefits, you want time off. Yeah, we need you so badly. Get your butt in here. Those days are kind of behind us now. I think, all the Fed rate increases has increased the cost of doing business. And I think a lot of businesses are sort of second guessing their expansion plans, and they're not hiring as much as we saw there about a year or so ago. Headline: U.S. unemployment rate here, it's a 21-month high. So, like we said, Chair Powell, he's getting what he wants. This is exactly what he wants. The issue here, though, is that it's the U.S. housing stock and it's the U.S. housing industry that's the biggest problem here. And I don't know how long it's going to take and how many interest rate increases it's going to take to get guys like Fink and stuff to stop their sort of major thirst for U.S. housing U.S. houses. And actually, what's interesting, and I've said to you this before, I've seen a lot of reports where people say the most desired asset to be invested in around the world, is it Russian oil? Is it South African palladium mines? Is it Brazilian coffee plants? Is it Canadian lumber? No, it's one thing and one thing only. People want to own, especially if you're a pension fund around the world, they want to own U.S. single family houses. And so, we've got this major tug of war. And sadly, of course, the consumer, because this is the only way that the Fed can slow things down, is let's shit on the consumer and make their life just not much fun. And so that's basically what you're going to see here. And at some point, something is going to break. I don't think it's the U.S. economy, because some of the data coming out of the U.S., just the fundamental structure of the U.S. economy is incredibly strong. Of course, where the problem is, I think, is in these funny little commodity countries. And I've been barking to you guys ad nauseum over this. So really, there shouldn't be anything new about what I'm saying here. So anyway, big report, big econ today. Obviously, not really Main Street Joe Sixpack friendly. In fact, I don't know actually. Here, let's maybe do a real-time one, because I think that's from this morning. Let's take a look at the actual data here. Here is Friday. So Canadian unemployment rate ticks higher. That should happen. In fact, actually, Canadian economic data, basically GDP is flat. So you have basically no growth out of Canada at all, but you've got this hyperinflationary environment. So in reality, Canadians are just dying 1,000 deaths here. And it's incredible to watch these. Okay, you know what? I get myself into too much trouble talking about substitute drama teachers. So let's just leave Canada out of this. It's a shit show. Stay the hell away from here. U.S. data. Like the big number that's obviously going to get everybody's attention. Like we said, less jobs were created. But as Julian pointed out yesterday, you just have to understand that these big U.S. national econ reports can be highly, highly subject to revisions. And a lot of people don't trade off of these. But what I said there earlier with regard to where they push the market into the report, I think is actually pretty telling. And actually, I had a beautiful setup in crude oil earlier this morning that it set up exactly through that event. It was just absolutely textbook. Um, Anything else we can sort of discern out of this? I did find, things like average hourly earnings ticking down a little bit, So that's going to, of course, make the Fedsters a little bit happier. Had some sort of econs come out following. Notice, we've been talking about this recently. Again, this is kind of stuff that the Fed wants to see. It's not a huge difference, but ticking down a little bit from expectations on the global PMI. And then the local services PMI, same thing. Market is expecting 53, ticking down a little bit. So lots and lots of anecdotal information here. Main Street not feeling so good. And so as a result, what does Wall Street do? Woohoo! Rally! Well, that's not very fair. But anyway, what is interesting about this market, oh, nice. Hey, this is actually, I suppose, actually, you know what? Why don't we go onto the charts? So I think we've talked enough econs here. So we head on over to the charts. Where is that page? Is it this one? Yeah, here we are. So setting up this morning, crude oil. Figured it was testing resistance. And as I said, absolutely just textbook. In fact, even in the lounge today, I even posted, this is why we trade the opening range trade. This is why we trade futures. So, this was the non-farm payrolls report that came out first thing this morning, right in here. And look how they were rallying the market all overnight. This is crude oil. I trade crude for these guys over at Top Step, and also good demonstration for this site, trading futures contracts. And look how they popped the market on that non-farm payrolls report. But this was into a very, very important horizontal support and resistance level, and you can't see it off of this lower time frame. If we go up off this 4-hour chart, you probably see it a little better. So we had two previous key highs here, and they rallied the market right into that level, and so that's trade location for me. That I have to pay attention. This is acceptable trade location. And then they just painted following the news announcement. Now, whether you're gonna, I wouldn't go off of the non-farm payrolls data as it's up, so that means I want to go long, or it's down, that means I want to go short. But what I would just simply say is they brought the market into that level. They actually painted beautiful divergences heading into that event. You can see how MACD was rolling over, RSI was awfully toppy. Look at Willie, just beautifully, stupidly overbought here. So they rallied the market right into this window, and then they put in the most beautiful boom, 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 3-bar fractal top. And so, this is bread and butter for Beamish. So he's got to hit that every day of the week. So as you can see, that is where I am short off of this particular platform. This, like I said, you couldn't script why we trade opening range trades any better than this. This was just absolutely perfect. So Brian's short off of the non-farm payroll report and the top that came in, and then the opening range trade comes in, and literally it was just one directional. And this is exactly why we trade the opening range trade. Absolutely perfect. So got one off at 1-to-1, got another off at 2-to-1. They even flirted with my level, kind of pissed me off to see if I would balk, but I didn't. I was patient and disciplined. Move my stop to scratch as of this point here, and now we're just riding the wave. We had 3 lower highs here, so I run the 3 high-low method, trailing stops off of the 3-minute chart here. So hopefully you can see we were working our way lower highs and lower lows. And as we make, and this is what I teach in the education program, as we make lower highs and lower lows, I can move my stop. You can see at this point I had my count 1, 2, 3. So I have my stop above here. and interesting into the euro close. They literally, and this is why I do the 3 high low. So you can see how they took out this high, took out this high, even took out this shooting high, star high. Well, not really shooting star, but anyway, big wick high. In through that euro close, see if we could screw some more people out, and then all right, let's resume the downtrend. So still short. And if anything, when coming out of the opening range trade, and Chris and I are my trading partner and I are very focused. So once we got to here, we're like, okay, phew. All right, I'll talk to you in a couple hours for the daily brief. Number one priority, move your stop to scratch. And if you want to do 3 high-low method, okay, that's fine too. But be the demonstrator of best practices and don't fuck this trade up. So still short, still enjoying the ride. I have no idea where they're going to take this thing out. I have a bear ABCD target down here. And really, I just got to be patient and disciplined and don't F the trade up. Already took a couple cars off here. You can see on this bad boy, took some profits on this guy, got him running. But also over on the Top Step Combine thing, the demo account for them, I've got an open position working with stops up at these levels. So feeling very, very positive. This is exactly why I trade futures and I get up at ungodly hours in the morning to do exactly this. So felt very positive about today. And trading partner and I both in sync, feeling very good about demonstrator of best practices. Like I tell you, one of the huge priorities for me here doing all of this is I'm trying to make a positive difference in the world. I'm trying to show you guys, what does a professional trader's life look like? And remember, I used to do this full time. So it's a little bit rusty. It's taken a couple months to get the rust off, but I'm feeling in a pretty good groove. And so we're doing very, very well here right now. Very positive. Lots of journaling every single day. Got to get in there and journal. You got to learn from your mistakes. And actually, one thing I'm very proud of myself is, since the 24th of October, have not committed any errors. And I consistently say that I want to be the demonstrator of best practices. So number one priority is no more demon finder entries. Or, nobody's ever perfect in this world. Give yourself permission to screw up. So never put a bar of it has to be 100% perfect, but trying to minimize bad behavior. So anyway, that's good to see. All right, thank you, sir. It is Friday. I always like to ask, if you're sort of looking at the market, remember, once the Europeans are done, then we have to ask ourselves, okay, well, what is Wall Street's motivation here? So, if you're looking at the stock market and trying to figure out where the hell they're going to take markets out on a Friday afternoon, this is a weekly options expiry, so it's not really that relevant. But nonetheless, where is the heaviest open interest on the put options? You can see a whole bunch of puts way up here. So, sitting right now at 435.57. Here is the open interest data. You tell me, is Wall Street going to hit a home run today? It should be pretty easy to answer. And it's so cliche how they do this. I might even argue that they could even let the market come down a chunk. You could even see the market come down to, like, say, 432 here, and Wall Street still hits massive home runs. We can't even see what's below this, but my hunch is probably if we do, like, I don't know, 20 strikes or something like that, you're going to see that they made even more money. Yep, look at all these. I mean, this is the definition of Wall Street just knocking the cover off the ball here. Jesus, those girls, they're expensive. So the Wall Street boys and girls, for that matter, and houseplants, if there are any option writing houseplants out there, they made out like absolute bandits here today. I wouldn't be surprised if maybe they calm things down. Probably 433 is some sort of pivot there. But on balance, this is exactly why I suggest you learn this kind of concept so you can understand where is Wall Street motivated to take this market out. And I think they've won here today. Way to go, Wall Street. Question, of course, is how high are they going to push it? One thing that I did notice looking at our data, and I've talked to you guys about this recently, And I think this is a really, really good example. Into that big eclipse event, that was huge. I really hope all of you guys learned from that. That was so incredibly huge. And yet, do you hear anybody in the public talking about that eclipse event? Nobody. And I also have talked to you about what are the darlings in the market. When the darlings of the market look like they're about to puke out, that's probably when a bottom's going to come in. And mysteriously, look how this NVIDIA is just, why did this thing turn here? I mean, look where the earnings report is. We're not even close to the earnings report yet. And yet this thing just literally turned on a dime right through that bloody FOMC event and the eclipse window and has just gone straight up here. So I might argue that we're probably running out of steam once we fill in this gap. Then we're going to get into, all right, let's see if these guys actually are earning money. But what a great example of that eclipse window and just watching the darlings of the market and how they do. Speaking of darlings of the market, look at I mentioned earlier, look at that damn Toyota. God damn sons of bitches. Oh, God. Love to be sitting on a free rider on that guy. Oh, boy. Well, anyway, it's gone. Can't do anything about it now. Noticed Microsoft really leading the charge here. Was a little surprised to see Apple a bit weaker, but wow, look at Alibaba just flying here. So remember I had mentioned earlier that Japan was feeling better. Looks like Chinese stocks are feeling a bit better. Some of these other darlings, Netflix catching a nice bid. Hell, even Meta is catching a bit of a bid here today. So long and short of it here, I would actually still call this, I don't know whether I'd actually really call this a new bull market. That's the irony of all this. I still think we're in dead cat bouncy mode. And really, if anything, what I think makes a lot of sense here, and this is probably how we should finish the video off here today. I don't know where my drawing tools went. I'm not quite sure what happened there. Maybe I have to turn that on. There we go. I think that we are trying to carve out some sort of inverted head and shoulders here. So, notice, you heard Brian talking about 4-hour crude oil, horizontal support and resistance, how that's a trade location. Notice how we have this little wick up top here. This, I think, is going to be some sort of neckline, right? And that would actually be a really good trade location to hunt probably first thing Monday morning kind of idea. So I am looking for some sort of pullback here. Now, the interesting thing about inverted head and shoulders is, shoulder might just be something like that. And then up we go. But I would expect a bit of a pause, and it would be through that consolidation that would actually set up the next move higher if it is going to come. Finish off today's broadcast with you guys. Quick boo at ye old corn. Nice to see crude oil's working lower. Just leave it alone, Brian. Don't tinker. If anything, I suppose I have permission now to move my stop to just above that level. Oh, wow. Look at all these profits I get to lock in. Woo! And actually, that makes sense because really all I'm doing here is I'm just moving my stop to settlement. So, that's not a bad place to hop. If we recapture settlement, you might find that this thing just takes off. I don't think that's going to happen, but anyway. All right, moving on to ye old Bitcoin, because that's what we wanted to finish off here. As I said before, I definitely am very cautionary about crypto and actually the stock market now too, because of what I just said there on the ES. I think we're coming into resistance now. Looking at the Bitcoin futures, I think that this story is pretty straightforward. I had said this to you before, and I still think it's exactly the same. The inertia that we had on this move up, it's exhausted itself. And in fact, if you look at things like Bitcoin, and it's interesting how this bot is still just basically sitting right at scratch levels. But if we look at things like momentum, you can see that we're not making higher highs, even though we made higher highs in price. That's a warning about momentum. You can see Willie did get stupid, and on this push to new highs, Willie did not move to new highs, and RSI did not move to new highs. So, and also too, you can see the buying interest. if this thing is so awesome and so wonderful, where the hell are the buyers? They're just not there. So we'll see what happens here. As it goes, you all know how my process works. I mean, hopefully, I've been barking to you guys forever. So I want to see a trade location, which I think we're getting into trade location 4669s. And then also too, I was tweeting out things like I was quite surprised that we actually now have officially hit 38.2 first stop targets. And is this the only stop? Keep in mind, if this is an empire top, then we might just have a big, ugly red candle that looks basically the same size as this. That's what usually happens. You saw the empire. Well, it wasn't an empire top, but you saw the little fractal top that I shorted crude. So this is what usually an empire would look like, and think Empire State's building. So, maybe we finish this week, beep, somewhere in here. Then next week, we find out whether the dump comes. And keep in mind, there's trendline support and there's moving average support. That's way down here. So we could very easily carve out some big ass fractal top. Did find it interesting that the 38.2 there was tagged right on the SBF verdict. And there's a good example of technical analysis meeting fundamental drivers. I definitely think the SBF conviction now, I think he has been convicted. And now, of course, there's another I think another 5 charges that he's facing in the winter time, and then there'll be the sentencing. So he's toast. And it's kind of funny. Somebody in the lounge posted, Jim Cramer says he's going to get off scot-free. So that was almost guaranteed that he was going to get life in prison. Just kind of funny. But anyway, so there's another anecdote. This is a weekly chart. You can see where short-term moving average support is. Could we use a bit of a break here? I think so. Anyway, we'll see how it goes. What I would say in the short term, to finish off this broadcast, is same sort of thing off of the futures. This, to me, actually looks like a head and shoulders top is trying to form here, which means we might be stuck in this narrow sideways channel for quite a while. So I could very easily see that as we work our way through November, we're just stuck here on Bitcoin. That could very easily be the case. And one reason why I don't think that this thing's going to absolutely collapse is, of course, for me to actually short, I have to see an M top, which means at some point, we're going to have to go back up and test that high if this actually is the top. Notice this sort of double top price action, double top. Never did fail through these levels. So at whatever the pullback low is, it might be here, or it might be down into these levels. Notice there's a cheeky little gap down below here at 34,000. We could very easily pull in back into that area. And all this is doing is just carving out a massive head and shoulders fractal top. So I'm not really looking for Bitcoin to puke out and lose its lunch and dump. Having said that, massive rally off the bottom. If you did take the long, congratulations, you made some great money. Why not pay yourself a little bit? And, the algo is just going to do its thing. So everybody is subscribed. Maybe we'll talk in the after party a little bit about that. But, on balance, what I am seeing is guys like Sjord, they just keep coming up with just these incredible ideas that are just booming higher. I mean, do I want to step in front of something like that? No. Do I want to buy something like that there? No, can't fucking touch that with a 10-foot pole. Having said that, if I'm long, which we are, man, enjoy the ride. You can see where I went long here at $1.27. I think I could better go take some profits soon. Holy shit, I'm sitting on a triple on this one. I didn't even realize that. So, that's a crazy market. And do I want to step in front of this thing? Look at that chart. You'd be an idiot to step in front of that. If anything, this is a really good example where you want to buy against the lows, manage risk, and then just let your winners run. And don't be in a hurry to call tops on these things. Just let them run. Anyway, all right. So I think I'm going to leave the free video at that. Slow and steady wins the race. God, anybody who got in on this TBR, it looks like TRB. Actually, oh, maybe it's stalling out a bit here. Anyway, okay, I got to shut up. So have yourselves a great day. PMA for the win. Slow and steady wins the race. My goal here for today is, can I close my crude oil short out at the lows of the day into the closing bell? I love those trades. Those are the best trades ever. But I'm going to declare today a victory, and I feel very positive about being the demonstrator of best practices for all of you. So if you want to learn how to do this, consider joining our education program. This is what we teach. Well, I had a great time in our pro day trader room and working with my trading partner. Today, and as I said, big shout out to Raf, another one of our TRI alums who just went and got funded at a prop firm, and he's feeling very positive. So it's just a great day all around. Got to be super happy. All right, have yourselves a great day. PMA for the win. Not quite sure what we're going to do in the after party today, but I hope you guys got some value out of all of that fun ranty rant. All right, all the best, hugs and kisses, and bye for now. Mwah! And a big kiss too.